soon from Federal Reserve Studios, Creature from Jekyll Island Productions, and from the creators of famous hit movies like Just a Little Bit Pregnant, Monetary Alchemy, Greenspan's Bubbles, Ben Bernanke Saved Us, There Is No Inflation, Repo Madness, Banksters Stole Everything, Greatest Economy Ever, Central Banker Kumbaya, and, last but not least, Trust Me, I'm Lying, is the newest and largest blockbuster, dark comedy, action drama, and tragedy movie yet, QE by Another Name. And you don't even have to pay for a ticket at the theater to see it play out. Federal Reserve Studios is even increasing the movie's budget by hiring a new, more talented and expensive spin doctor or movie script fixer for Fed speeches for improved confusion, misinformation, and propaganda. Expect many operation twists and turns, lots of off-balance sheet humor, and a compelling redemption story as the rich, greedy, and evil private equity vulture seeks a chance at redemption to earn his heart of gold as he battles temptation along the fiat currency road to hyperinflation and moral bankruptcy. Will Jerome Powell and the Federal Reserve win the ultimate race to the base with permanent repo madness and not QE4? Or will another country succeed in destroying its currency first? Stay tuned and welcome to Dystopia.
Okay, so I recorded that parody commercial for you guys for QE by Another Name, not QE. So we got the announcement a lot sooner than anyone actually thought. The Federal Reserve must have had an emergency meeting. There is no other explanation for it because the Federal Reserve was not supposed to have a meeting until October 30th and 31st. So most of the people that were predicting that this would happen, they were saying November the earliest. And here we go. Effective October 15th. So Jerome Powell was predicting this would happen at the next Fed meeting, but it had to happen sooner. And he was saying that it was going to be balance sheet increases, but not QE. And you know what's really funny is last night going around Twitter, I don't know who found it initially, but it was going around financial Twitter, FinTwit, very, very quickly, that the Federal Reserve is having real problems. The Federal Reserve's chasing its tail. There's so much confusion, so many problems at the Federal Reserve that they're actually going to hire a new spin doctor, which I mentioned in the commercial. They are now looking, I believe they put on LinkedIn that they are looking for a senior speechwriter that will, I'm going to read the job title here. The senior speechwriter composes and edits speeches, congressional testimony, talking points, PowerPoint presentations, articles for publication, and related documents for the chairman of the Federal Reserve, and as assigned, the vice chairman and other board members on a wide variety of topics and in formats appropriate for varied other media. You cannot make this stuff up. They need to improve the marketing, the spin job. Hilarious. So that's why I made the parody, making this like a movie commercial and putting all the funny things in there. But there's a bunch of crazy reactions from regular financial professionals, hedge fund managers, regular financial professionals who are not in the gold community, who are not even in the alternative media, and they're getting upset at the Fed for doing this a lot sooner than people thought. It had to be an emergency Fed meeting. Either there was a bunch of phone calls and or an in-person emergency Fed meeting to agree to something this quickly, because normally the Fed, things happen at a actual Fed meeting. So, the size of this thing. Let me read a tweet here. I think this is appropriate. This guy is not a gold bug. In fact, this guy makes fun of gold bugs. Let me pull it up here on my Twitter. This guy is Greek Fire. He actually makes fun of libertarians and gold bugs, but he's a former financial professional. He says that QE3 was buying $45 billion per month of treasuries, not QE is buying $60 billion per month of treasuries. Something to think about. So according to Daniel, and I want to go into more depth about how confusing the Federal Reserve is. What they say, their actions, everything. Because they are literally willing to do 180-degree turns very, very quickly. So these are from people that have tweeted out today once the announcement came from the Federal Reserve Danielle DiMartino Booth was retweeting a lot of this stuff, and she even added to the confusion further, putting out a tweet, and I'll quote the tweet first. It was from much earlier today. That, quote, "The Fed is not making monetary policy. How many times can that be repeated? It just keeps extending out the expiry date for the repo, overnight repos, now to the second quarter of 2020. But safe assured, these operations that are quickly becoming part of permanent monetary policy are not permanent monetary policy. Get it? Got it? Good." So if you're confused by that, and I'll read it one more time, you can join the club. I think she was joking about the Fed speak and how confusing it is. So the quote, "The Fed is not making monetary policy." This is what the Fed is claiming. I'll add that in there. How many times can that be repeated? It just keeps extending out the expiry date for the overnight repo program, now to the second quarter of 2020, when it was supposed to end a lot sooner than that. They pushed it out to November. I'm adding this in. But safe assured, these operations that are quickly becoming part of permanent monetary policy are not monetary policy. Get it? Got it? Good. So I think that encapsulates, in a funny paragraph or so, the craziness that's going on. Only 2 likes? Yeah, it's probably because my channel's being censored. I've added, I think, not even 100 subscribers in the last 5 weeks. Not even 100. Oh well. I'm just going to keep crushing it with the quality content. I spent a good amount of time working on that parody commercial, writing a script, editing it, so it was really funny. If you want some laughs, go and listen to the parody commercial. It's about 90 seconds long. I think you will get some laughs out of it. Just don't have any drinks in your mouth. I don't want anyone spitting on a computer screen and creating an electrical fire, or spitting on a family member. I don't want any of that. Okay, so let me read some of the summaries that the analysis from people that Danielle DiMartino Booth follows, professional money managers, aka not gold bugs. So these are regular financial people that are now starting to really question what the Fed is doing. So these are tweets that she's put out, some of the summaries of what people have said, because I put them in bullet point. So the Fed is losing control of the front end of the yield curve. It is attempting to get control of the front end of the yield curve back. It is attempting to force an uninverted yield curve. And the Fed is buying US Treasury bills to increase reserves in the banking system, and not to help with the US Treasury auction demand. Those are the claims. So here's the funny thing. I'll add in, before I talk about some more of these bullet points from some of the analysis. You can see a lot of these tweets on Danielle DiMartino Booth's Twitter, because she's retweeting all of these comments. It's a crazy amount of them. There's so many of them. And to cite all of them, just take a look at her Twitter. But so the Fed, with the quantitative tightening program, the Fed tried to take out reserves out of the system. They tried to reduce their balance sheet. And now here we are with the repo operation that's gone on a lot longer than they promised. They said it would not increase the size of the balance sheet. And here we are. I just checked the balance sheet again. The balance sheet is now, this week, I believe it was up a small amount. It was up only about $4 billion. But the balance sheet is not decreasing. I think that's the key point. So they've been telling us since repo madness was officially, it became public, I think, on late night, September 16th. And then we got all the articles out the next day on September 17th. And they were telling us every day once the repo started that no big deal. It's only overnight. It's not a big deal. It's only permanent. Repos are normally part of the system. These repo spikes are not a big deal. It doesn't matter. They're not going to increase the balance sheet. Then they started the terms on the repo, and then they extended the repo. So we're starting, if you're trusting what the Fed is saying publicly at this point, I have beachfront property in Kansas to sell you. Okay, I don't fully trust it, because you know what? How many times have they already changed it in less than a month? So even today, the Wall Street Journal reported that over $80 billion in repo was done today. That's with the terms, that's with the daily overnight repo. So just today alone, on Friday, October 11th, 2019, over $80 billion in a single day. Not tiny amounts. Now, this is supposed to be paid back immediately, and some of it's on terms. We'll see what happens. We'll see how long this is extended out. But increasing the balance sheet is not going to be labeled QE. Meanwhile, we have the trade news announced today, and in spite of the announcement with what the Federal Reserve is doing and the trade deal announcement, the dollar didn't take any of a hit, really. It only went down a little bit. On the dollar index, it's still above 98. It's holding above 98. It's at 98.33, so it's only down 0.37% today. So the dollar index did not get smashed. Yes, you can check. You can check the Wall Street Journal is reporting today in an article. This is not me making things up. The Wall Street Journal reported it. There's an article out on the Wall Street Journal. 80 billion in liquidity draw today. I think there was 3 or 4 counterparties, 3 or 4 banks. They won't say which ones. And Luke Groman put out on his Twitter an article from the Financial Times saying that the Federal Reserve, this article I think just came out today. It came out yesterday, late last night. That the Federal Reserve is now toughening liquidity rules on foreign banks. So Deutsche Bank is expected to benefit the most from the change in the U.S. banking regulator stance for their American subsidiaries. So Deutsche Bank will not have to adhere to tougher rules, and it will be easier for Deutsche Bank to borrow probably from overnight repos, talked about in the article. I'll read it for you right now. U.S. banking regulators have dropped, I'll read some of it. Regulators have dropped an idea to subject local branches of foreign banks to tough new liquidity rules. So they've dropped the laws in a move that could benefit the troubled Deutsche Bank more than any other. The Federal Reserve will announce on Thursday that it has decided against forcing U.S. branches of foreign banks to hold a minimum level of liquid assets to protect them from a cash crunch, according to people familiar with the decision. They added that such rules are likely to be proposed in the coming months by international regulators instead, an outcome the banks themselves have argued is preferable to national regulators imposing rules. So the Fed's decision on branches' liquidity requirements is part of a package of measures designed to shake up how international banks are regulated in the U.S., the latest in a series of steps under Trump administration to rewrite the rules to put in place after the financial crash. So foreign banks do most of their U.S. business through intermediate holding companies, or IHCs, which are subject to extensive regulation and stress testing. The stress testing is a joke, though, so putting that in there. And Germany's Deutsche Bank, which is scaling back its Wall Street business as it tries to stem spiraling losses, potentially, especially derivatives, potentially has the most to gain from the concession since it has the biggest branching presence of any foreign lender with assets of $175 billion in its main U.S. branch. So if you want to read more of that article, you can, I'll put a link to it in the information and description section afterwards. So let's do a comparison here of QE programs. So the Fed began QE1, they announced QE1 on November 25th, 2008, and Ben Bernanke announced aggressive attack on the financial crisis of 2008, the Fed began buying $600 billion in mortgage-backed securities and $100 billion in other debt very shortly after. So we're starting to, and the Fed's, this is why you have to monitor the Fed's balance sheet. This is why in a perfect world, more transparent world, more honest world, we would have audits of the central banks. But we do know that the balance sheet now is still up over $190 billion since the end of August. And since Repo Madness became public, let's see here. Some people don't like me calling it Repo Madness. They think it's hyperbole, but I think we're living in a joke of an economy, and I can make some jokes. Especially if it's going to get me more viewers and it's going to get you guys some laughs instead of crying about this stuff. So the permanent, let me see here. I'm trying to scroll here with the Fed's balance sheets being a pain in the butt on their website. Trying to get September 16th and 17th. I think I have too many windows open. This is what happens when you try to do things in real time during a live stream show. Things don't work out according to plan. So Goldman Sachs' prediction from earlier this week, on Monday and Tuesday, Goldman Sachs was saying about $60 billion per month for 4 months. The Fed announcement ended up being very similar. Okay, back to the notes. I didn't go through all the notes here that I jotted down about people analyzing through the Fed announcement. So let me repeat some of the stuff. So today's not QE announcement today by the Fed. Here's some people's observations of things. The Fed has lost control of the front end of the yield curve, and they're trying to force their way back to control the front end of the yield curve. They're also trying to uninvert the yield curve through force and intentionally steepen the yield curve, according to some experts. These are not people in the gold community. The Fed needs control of the front end of the yield curve to cut rates if necessary. The Fed buys US Treasury bills. Another person's opinion is the press release is the Fed is buying US Treasury bills to increase reserves and to not help with US Treasury auction demand. But if the Fed had not done quantitative tightening, they've basically done a 180 from the quantitative tightening, admitting that they did too much tightening, they took too many reserves out of the system, and now they're trying to replace the reserves quickly. They also want to eliminate the interest on excess reserves. Now there's a difference between the regular reserves and the excess reserves. And the Fed was also paying interest on the excess reserves, and there was foreign banks and foreign central banks that were parking cash at the Federal Reserve, and they were making big profits off the interest payments on the excess reserves. Just more craziness and snafu and screw-ups and ridiculousness. Probably an unintended consequence that the Fed was paying interest to all those foreign banks and foreign central banks. Because if the American people knew about this, I'm sure there would be a lot more phone calls and angry letters and emails to congressmen and congresswomen about that. So another person's opinion is that the more the repo madness is done, so the longer this overnight repo nonsense goes on, that there will be lower and lower rates. I mean, that was a given that fits in with the Japanification, financial repression, stagflate, and tax and lie thesis that I've had. And the Fed is trying to force the yield curve to uninvert. That was another person who was saying that. So the Fed is attempting to increase reserves that it took out with quantitative tightening and also cutting interest on excess reserves, but not the main reserves, only the excess ones. And all this stuff sounds very confusing because the Fed only 6 months ago, they were saying different tunes. November, December, 6 months ago, too, the tone was entirely different. There was a small group of people at the Fed that were warning that there would be problems in repo. So it's amazing that how leveraged the system has gotten. The banks, the corporations, the governments have drastically over-leveraged when the interest rates got brought down. So they could have fixed their balance sheets, and instead they didn't fix their behavior. Just more profligacy, more wasteful spending. And my analysis of this, because it sounds like there was a lot of 180s in a lot of the Fed's policies going back the last 6 to 8 months, because a lot of people at the Fed really do not know what they're doing, but they can paper over so many problems with new emergency liquidity programs, not QE, whatever the heck they want to call it, and bringing in this new speechwriter means that they're looking for new ways to lie, confuse, obfuscate the truth from Main Street. So it also means that there was, in my opinion, an emergency Fed meeting. So this was not handled over the phone. This was not handled through email from the Federal Reserve voting on this, that there was another secret in-person Federal Reserve meeting to vote on this. Because even a lot of the experts that were paying the most attention to this only expected a permanent repo facility and trying to increase reserves sometime in November. Early November was the earliest I was reading, up until today's announcement. Douglas says Luke Roman will force for the trees. We'll have to fund U.S. budget deficits from here on out. Not the whole budget deficits, because there's still strong demand at the Treasury auctions. There were some articles that came out about that this week. Pension funds who are suckers, there's a lot of not so smart money managing pension funds, unfortunately. There's a lot of demand for treasuries from foreign investors because on a relative basis, the U.S. still has positive yield compared to many other countries. So if you're in an emerging market or you're in the European Union, U.S. Treasury yields look a lot better, a lot safer on a relative basis. This doesn't mean objectively that they're all safe. It's not. It's relative. It's subjective. And if you're a money manager, you can't go to all cash. You'll get fired. You're risking your career. So I don't know if this means the Fed's, how much of a budget deficit the Fed's going to have to fund. Peter Schiff doesn't look at a lot of the details of the Chinese market, and Jim Rogers is a smart and successful guy, but he's also made a lot of bad market calls lately. And he's admitted that he's a poor market timer. So thank you very much to my super chats from Greg. I appreciate it. Super chat from Michael. I appreciate it. Super chat from Mark. I appreciate it. I haven't heard any new news on HSBC, but I will take a look more at the trade deal, the partial trade deal. And it looks to me like Trump needed a quote-unquote win. He needed some type of relief package to help him with Midwest voters, especially the farmers, because Trump was probably dropping in the polls there. So he needed some type of fix, temporary fix or relief package to help him with 2020 re-election. And China needed help with dollars and other problems. So it seems like may have gotten some type of temporary settlement. I know for a fact, though, because I've listened to a lot of interviews, read a lot of comments from Bob Lighthizer and Kyle Bass, they did not want a trade deal done. So this was Trump overruling them. Kyle Bass and Bob Lighthizer both agreed to continue putting the screws to China. So this was all Trump. No, not all bonds, but there was actually pretty strong demand for a Treasury auction. There were stories on it earlier this week. No, I don't sing. I'm sorry. I have many talents, but singing is not one of them. Why so intrusive? It doesn't matter. Why so intrusive? It doesn't matter if they call it QE or not, quantitative easing QE or not. It does not matter. The balance sheet has not gone down. They were telling us that the balance sheet would not increase. Okay? They've been telling us since September 16th and 17th when these came out. And early on, people were like, oh, it's only overnight. You don't understand the repo market. It doesn't. It's the repo market. This is normal part of the banking system. Yes, repos are normal part of the banking system. However, it's the size per month of the repos that matter. Okay, when there's big increases in repos, say if the amount of repos in a month goes from $100 billion or less per month up threefold or fourfold or more than fourfold in a month, then those are red flags, because that's what happened in 2001. And that's what happened in 2007 and 2008 before the Congress had to step in with the TARP program, Troubled Asset Relief program, and then the Fed had to do QE1. So, massive increases in repos. Yes, some of these things are getting paid back, but we won't know of everything that's getting paid back without an actual audit. But the amount of repos is a warning sign, and normally it's a precursor to other actions by the Federal Reserve or Congress. Yes, China needed food. China needed food. China also needed an emergency infusion of dollars. They had an enormous shortage of dollars. Vladimir asked a good question. Do you know if the Fed officials have any extra non-public information or insights into this repo issue? Well, Vlad, if you're paying more attention, I covered this. There was a former New York Federal Reserve manager. It was in Michael Leibowitz's article, QE by Another Name, earlier this week. It was last week or earlier this week. And he cited a research paper from one former New York Federal Reserve upper management person talking about this. And Goldman Sachs probably had some they probably got some type of tip-off. I don't know if it probably wasn't technically illegal. Who knows, though, at this point? I mean, it's not like anyone's going to go to jail. The rule of law in the United States, especially for rich and successful people. So yes, there was people who were making predictions about this, and a lot of them have come out. Look up the Michael Leibowitz article, QE by Another Name. I talked about this. I even read part of the article. He cites a paper from a former New York Federal Reserve official. I don't know if Trump bailed out China. I don't know how large the trade deal package is. I have to take a look at the details more, but he gave them some temporary relief because the screws were really tightening on China. I may integrate this then into a trade deal show tomorrow or the next day. We'll see. But I was going to talk about, there was a really good article that came out in the last month from a website called, I think, Inkstone, and they cover things inside China. And there was a lot of interviews with people in the Chinese middle class, and it was going into detail about their struggle and how the Chinese government was censoring, I think, the word stagflation and currency devaluation on social media and things like that. And how people in China, like their food prices were rising. They were interviewing people, and the article was really good. So I may integrate that. I was going to do a separate show on that. I may integrate that then into the trade deal, and how China may have agreed to some concessions because of that, and Trump was worried about his Midwest numbers if he's getting the farm relief deal. So we don't know if the banks are posting any collateralized loan obligations. As far as what the New York Fed, I put that link in there for the New York Fed that you guys can monitor yourself, that the New York Fed lists publicly of what they bought, how many banks were their counterparties each day for repo, and either the term ones or the overnight repo, how many bank counterparties, and what the Fed took as collateral, either as treasuries, agency securities, or mortgage-backed securities. And the collateralized loan obligations are not listed in there, but there's no way of knowing for sure without an audit. That's the truth. I've spoken with a number of financial professionals about this, and some people, not just gold community people, but some people actually think that it's possible that the CLOs could be there. Peter Schiff was right about QE, but I mean, you didn't have to be a rocket scientist to see with the deficits that the U.S. federal government is funding. Republicans and Democrats agree on massive government spending. Republicans are borrow and spend. Democrats are tax and borrow and spend. Neither party wants to do any significant cuts in the size of the government. Neither party. They may move some money around from one agency to another, or from social programs to warfare, or vice versa, depending upon which party controls the majority of Congress, or two-thirds majority of Congress, or which party's in the White House, or which party has both. But when you're running, officially the U.S. government is running $1 trillion budget deficits. Unofficially, and I wrote this this is behind the paywall, it's a paragraph in there about the gold market. And so in the short term, the gold market in dollars may go down. In 6 months or a year, 2 years from now, the gold market's going to go up. Smart money is accumulating physical gold. Smart money is buying dips. Unofficially, the real budget deficit for the U.S. government, off-balance sheet items and other things that the U.S. government does not include in their official budget deficit, the budget deficits are larger. I've seen some estimates that the unofficial budget deficit is $6 trillion per year. And I've seen the math. There was a article, a accounting, nonprofit accounting agency that was tracking this, and it was cited in a article on Sprott Money. I'd have to look up the article. It was a couple months ago. But yeah, they showed the math, and they're saying that unofficially, when you count all the off-balance sheet items that the U.S. government doesn't count, the U.S. government, Jeff Gundlach was saying that last year the U.S.'s federal government debt increased by $1.4 trillion. So it was a lot larger than the official $1 trillion budget deficit that was run. So that's clearly not sustainable. The crazy stuff in the European Union is nuts. Japan is a mess too. with a lot of their policy, and China's also a mess. And emerging markets were probably in the worst shape of anyone on a short-term basis. And that's why in trade negotiations until the deal was announced, and I didn't take a look at the details of the deal, so I can't tell you, but that's why they were discussing somewhat of another Plaza Accord, a Plaza Accord 2.0. So I didn't see if that was finalized or not, but they were discussing another Plaza Accord to try to help lower the dollar because emerging markets were in that much trouble with dollar-denominated debt. And China too. Douglas, I did a show on this in the last month or so that the US Treasury was projecting from July through the end of this year, they had to raise at least $814 billion worth of funds, and I said that that estimate would probably be on the low end. So $250 billion in 3 weeks does not surprise me. They were going to raise at least $814 billion from July until the end of 2019. No, it's not the US that's standing alone. All these other countries on digital debt-based fiat currencies. It was in the Treasury's own press release, that number. I did a show on this. It's back in the archives. I don't remember which one because I'm doing so many shows now. I'm hustling to make a living off my content, even though YouTube's trying to ruin me financially. But thank you to my Patreon account contributors. You're really helping me out. I might even have 200 in a couple months. That's how good things are going. And if you want to read my 9-page, in-depth, very detailed Sandstorm Gold article, it's behind the paywall for my Patreon account contributors. And if you're not a Patreon account contributor and you want to read the article, you can sign up for $5 a month. So the Fed, the senior speechwriter position that's being brought in, it's going to be marketing and rebranding. So they're going to come up with some type of name, maybe a relief program or repo relief or liquidity relief or something like that. I don't know what they're going to call it. It won't be called QE. There is such negative connotations for the phrase QE. Most people on Main Street, trust me, the Fed has the money to hire marketing professionals to test this in surveys. And lots of people on Main Street know what QE is, know what quantitative easing is. And so the Fed is not going to be using those words anymore. Anthony says, same old Fed, new great taste. Yep. Yep, probably from the same marketing team that came up with the Patriot Act. Yep, it'll do the name of the bill will be the exact opposite of what it really does. It'll be the Financial Independence Banking Act or something. I don't know. No, he didn't delete that message. He was getting annoying, so I sent him packing. He's getting a timeout. I don't have much patience for that. Just like the guy who kept brought up like all gold and silver stocks are bad. You're a moron. The Fed will never let go. This same guy was repeating this stuff ad nauseum. He was coming in every chat, and I was being polite about this for over 6 months. Every chat he was putting this Little John or whatever his name is, and 6 to 8 months ago he was like the Fed will never allow gold above 1,200. The Fed will never allow silver above 15. He was repeating this all the time. I remembered what he said. He was repeating it all the time. Do you think he would admit when he was wrong? Well, gold's not now above 1,200. It may, if they're going to keep printing all this money, we may never see gold at 1,200 again. If they're going to keep printing all this nonsense. Oh, of course I laughed at them. I even made fun of them. Look, if you make a ridiculous prediction about something, and I remember, I will call you out on it. So if you keep repeating, there was a crypto guy who was saying that Litecoin, he kept posting under a lot of videos that Litecoin was going to 2,000 in like a couple months. So I called that guy out on it too. He was adamant. Oh, when the cryptocurrencies were trending in 2017 before they crashed in 2018, he was like, Bitcoin to 40,000 and Litecoin to 2,000 or 3,000. And then he kept repeating some of this stuff in the comment section, and I was like, oh, really? What about your Litecoin prediction? That didn't work out so well. No, I don't think they're chatbots. Yeah, I'm not holding my breath for a $2,000 Litecoin. Especially, in my opinion, when the Chinese government was manipulating it so heavily. I don't even think it cost the Chinese government that much money to manipulate it. The stagflation is going to get worse. It's going to be stagflate and tax and lie. And they're going to lie about the stagflation. They're going to lie about the inflation numbers. I still see people commenting on Twitter saying there is no inflation. Oh, really? What about asset prices? What about my bills? Oh, those don't count, I guess. Okay, well, enough ranting. So if you want to read more of these articles, I will attach them in the information and description section. But the Fed is playing a lot of crazy games. They're not going to call it QE. It's going to be rebranded. They're going to hire an expensive marketing company. They're going to hire a new speechwriter. The marketing company is probably they're going to test out a bunch of phrases. There's also shrinkflation. So not only are some food prices up, and food prices in China are up a lot, which is why things were not so good in China. But food prices here in the US are also going up, but not as quickly as they have in China for the last 8 months, 12 months. But the Fed is going to be hiring marketing agencies, and they're going to be testing, and they're going to be coming up with good phrases so they can hide what it is. Really, all it is just balance sheet increases. Look at the official balance sheet. Because they're telling us that the balance sheet they were telling us for the last 3.5 weeks, since we found out about repo, that don't worry, the balance sheet will not increase. I must have read that 100 times. Don't worry, the balance sheet will not increase. It's only overnight. It's all good collateral. Yeah, it's shrinkflation. So either they raise the price a little bit or it stays the same, but then the cost per unit, the portion size, or you can monitor, guys, you can monitor this. If you really want to get into the weeds, you can do this at the grocery store or at like Target or Walmart or the drugstore, the pharmacy or drugstore. You can do this by monitoring cost per unit. So if you want to get really wonky, the Federal Reserve doesn't even do this. Bureau of Labor Statistics, they pay people to track prices, and they don't even write down cost per unit. That's really where you can monitor how much you're getting screwed over, is in the cost per unit. Because if the price stays the same, but you're getting half the amount, the cost per unit is going up a lot. And the price divides by like ounces or whatever, grams or whatever they measure the consumer good or food item in. Okay, well, I think that's enough for right now. I want to thank everyone for their time. I'm going to keep focusing on unique content, but it looks like we had a lot of current events and news stories. I can't do everything on one show today. Plus, I want a life. I want to go relax and have a nice weekend. There is a really good playoff game, baseball game on now that I want to go watch. So thank you to everyone for listening, and I'm going to keep working on creating unique content that everyone will benefit from. Hopefully, almost everyone will benefit from.